What's going on, everybody? This is Institutional Hunt coming to you with another video on technical analysis. This section and segment is going to be on pattern plays. The first one I wanted to do was actually on the head and shoulders pattern play. It's a pretty common one whenever it comes to being known, but at the exact same time, it's not necessarily a common one whenever it comes to higher time frames and everything else. So if you do see one, it's definitely worth paying attention to and getting in on, because it's a great pattern that really tells you a lot about what the market is doing. And that's one thing I want to make sure and convey about patterns. A lot of times people think patterns is just if the market's doing this, then it's going to go up, but they don't think about what that means. What does it mean whenever you see a head and shoulders pattern? And I want to kind of cover that, and then afterwards I want to go into a live demonstration. One of the main reasons that spurred me being interested in the head and shoulders pattern and creating a video on it is because I actually came across one, and I'm actually trying to make a play on one right now. So either way, without further ado, I just wanted to jump in real fast and talk about what it is and talk about the shape. Shape is pretty straightforward. You'll be able to see it, but it's basically an area wherever you have three total peaks. One peak, the middle peak, is higher than the two surrounding peaks, and the two surrounding peaks themselves are around the same height. So you've got one that's sharp peak in the middle that's higher, and then two peaks around it that are smaller. What does the shape mean? Usually it's going to be off of it is going to be off of a major resistance line or a major support line. So what it means is it found support on the line in the first hump. The market was able to push it up, and let's just say it's a bull market, and it's upwards head and shoulders pattern. Then that basically means that the bulls were able to push it up a little while to make the first shoulder. Then the bulls rallied aggressively and pushed it up higher than the previous high, but the market fell back down all the way to the support line that it had touched on before whenever it first started or rejected off of. Then the bulls came in again and tried to push it higher and failed. And they didn't push it. Not only did they not push it higher, they only pushed it about the same height as the first shoulder. Now, what that really tells you is that the bulls were tired and exhausted on the first shoulder because they had just made it through a resistance line and created a new support line on that. Then they tried to tried to create new highs, pushing up on those new highs. They weren't able to hold them whatsoever, meaning that there wasn't enough bulls to hold the highs. In fact, enough sellers came into the market and reversed it all the way back down to the resistance line, or to the new support line, I should say, which means that the sellers are starting to gain control of the market. Then the bulls push one more time with everything they got, and then they fail once again to push it up. So what it basically, a head and shoulders pattern, is what the shape means. It means that whatever direction it is in support of, or whatever direction the head and shoulders pattern is forming, it is showing that direction and that direction is weakening. That the people that had pushed the market in that direction are no longer capable of sustaining prices at that level. So why do you want to use that? First of all, it's a very strong sentiment for reversal. And by sentiment, I mean that when people as a whole see a head and shoulders pattern, they start licking their chops. They get very excited, very interesting, very excited that the head and shoulders pattern is existence. They'll draw lines, they'll get ready for it and everything else. The more people that see the pattern, the better. So the higher time frame, the bigger of the pattern, the more time that people have to catch on and jump on board, the better and more effective it's going to be. Which is the reason why, me personally, I don't want a head and shoulders pattern to be utilized anything below the hour chart. Hour chart, it can still be very effective, and 4-hour chart is my actual personal favorite because it really depicts a much higher game and time frame, and it shows it has a much stronger indication of overall exhaustion of the move. Another good reason why you want a head and shoulders, though, is because it predicts its own profit target. Because as with most patterns, there is a way to predict how far it will go. You measure the distance between the resistance line or the support line, basically the neckline, which I will show you what that is, and then all the way to the top of the head. You invert that, and that is the prediction for wherever it should go. So without further ado, let's go ahead and jump over to the live demonstration. Okay, so as you can see here, actually this is a trade that I'm in currently right now. This is the New Zealand dollar US dollar pair. And as you can see, this very nice head and shoulders pattern that it kind of formed up here on the 4-hour chart, which means it's going to have a lot more, power behind its meaning and what it's doing. Now, whenever I first drew this and whenever I first acted on this trade, I was acting on this trade kind of right here, because the neckline, which is the resistance line that it's tapping off of, can be at an angle. It doesn't have to be just this big flat line. It's preferred to be a flat line, but it can be at an angle if you draw it this way. So I acted in this area here, thinking that it was just reversing and coming back down. But I also intend, now that the neckline has done this, I intend to also take it on this bounce. And there's a lot of reasons why I intend to do that, but realistically speaking, if you're just playing on the head and shoulders pattern, this is how you do it. So we take that, and then we take the neckline, which we'll just take from here to there. It's about 270. So if you draw that down to here, the projected target should be somewhere right around in this area. Now you'll notice that my stop is actually a little bit above that, and the reason why is because of the monthly pivots. I do believe it'll probably end up going down towards that target, but because of the monthly pivot resistance potential, I didn't necessarily want to risk that, especially seeing how this line that it's on is also a major resistance line, as you can see, tap, 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 tap. So risking all the way down to here seemed like it would go just beyond that major resistance area, and if it's broken beyond that, then there's no reason to be getting rid of it. You might as well hold it, because this entire area right here, as you can see, it rejected almost entirely, so it would probably give the same amount of energy back down. Anyway, though, so that is basically what a head and shoulders pattern looked like. You have a shoulder here, you have the head, you have the shoulder, you draw a neckline, and the way that the trade is supposed to go is you're supposed to look for the break of the neckline, and then you want the retractment, and then you want to take that retractment down to the profit target. That is how you trade a head and shoulders, and then you just calculate the profit target by the top of the head to the bottom of the neck, and then you invert it. Very straightforward, very easy, very effective. This particular trade I'm just in a little bit earlier because of the neckline shape that formed. I thought was going to be a little bit different, but that's not a big deal, because I wouldn't be in this trade if I was just interested in the head and shoulders pattern. Once you start adding in things like, let's go ahead and add in the monthly pivot points. And those are daily pivot points, so that's completely useless to you. Not really, actually. Daily pivot points aren't bad, but it's nothing I would use on a consistent basis. Maybe just for a little bit of an extra confirm for a super short trade. There we go. We also have this rejection line right here, which is a monthly resistance line that I was looking to take the trade off of. I had an indication of it bouncing off of that, so there was more than one reason why I took that particular took it at that particular location. But I am expecting and looking forward for this break here. The main reason why is, one, and though I'm not a huge believer in this OPEC agreement that just came out yesterday, it is still a possibility that the United States dollar will continue to strengthen on the back of that potential OPEC agreement. So there's that. Generally speaking, I'm about neutral to bullish on the United States dollar anyway, and I'm very much a bear on the New Zealand dollar, because New Zealand has been actively trying to decrease the value of their currency, and they are in an interest rate cutting cycle. So they are going to cut rates more. And if you cut rates, your exchange rate is going to drop and your currency is going to weaken. So I am definitely long-term short on this particular trade. So finding a short that matches my fundamentals and also has a technical pattern like this head and shoulders pattern is definitely a good thing to go with. I could look to see if I can find maybe one more. I think there was another head and shoulders pattern that was inverted. Yeah, here we go. That'll work. Okay, so this right here is also, let's zoom in a little bit. Just 2 seconds while we do that. Well, I think I zoomed in way too damn far, and now I can't find the damn thing. There we go. I'm just going to do this. Pow. There we go. Went the wrong way. All right. So you have a head and shoulders pattern right here, and this one is a lot more defined as a straight resistance line. You see the shoulder here, you see the head, you see it bounce off that resistance line, create a node to the shoulder, and then boom, straight through it. Now on this particular trade right here in this example, a lot of times people look to try and take the retractment. This one ran away from it super fast, but just because it ran away from it super fast doesn't mean that you couldn't have potentially taken the trade. You just need to maybe go on a lower time frame or something else. Very important things to do though is make sure that you're monitoring local pivot points and other potential areas of issue, so you're not buying directly into something. You might want to wait until it breaks a little bit higher before you do that. But even if you were trading this and you didn't get this, on the way back down there was another opportunity here, and there was a definite opportunity here, and then the distance was 1700, which, as you can see, that was basically right around the area for the next resistance before it started needing to consolidate and its next move up. So head and shoulders pattern, use it. They're fantastic. Love them, and be nice to them because they'll be nice to you. Just make sure you pay attention to them. Use them on higher time frames. Make sure you're using the distance from the top of the head to the neckline to calculate your profit targets and go from there. If you like this video, please leave a like. If you like if you have any comments or you have anything that you want to discuss with me, or any input that you'd like to give me, maybe something that I didn't cover that you're interested in seeing, let me know. This was supposed to be a basic rudimentary pattern play video, so if you're new to head and shoulders, this will be a nice easy way to get an understanding of what they're for. If you have any questions, leave that comment below, and if you want more content, let me know, or anything specific that you want a video on, let me know. I do daily next day trading planning, so make sure and take advantage of that. It happens 4 to 5 Central Standard Time, Monday through Friday. Otherwise, I sincerely appreciate your time. I hope to see you again, and I will see you in the next video.